ETF Battles is an easy show to understand. We sort through your battle requests and we pit two ETFs against each other, and then someone gets clocked. Any further questions? Good, I didn't think so. Today's ETF battles between the ProShares S&P 500 Dividend Aristocrats ETF, that's ticker symbol NOBL. It's an Aristocrats ETF. Should it have a ticker symbol any less than a Noble? And then we've got the Vanguard High Dividend Yield ETF, that's ticker symbol VYM. Both of these funds track dividend-paying stocks, but they do it using different underlying indexes and quite different strategies. VYM, by the way, is the larger ETF between the two. It's got around $25 billion in assets, whereas Noble has just $5.7 billion. Fund assets is a good stat for color, but it really doesn't get to the root of who wins this battle. So we're going to have to strip these two ETFs naked and look at them from all different angles. Now, before I introduce our judges, a shout out to some of our loyal viewers. We've got Rasteel 2, PK, Good Guy 2, Javier Jimenez, Highfill Invest 1, and Simon Collier, all giving us thumbs up on recent ETF battles that they enjoyed watching, also posting comments. We really appreciate the comments especially. And keep those ETF battle requests coming. Be sure to hashtag ETF battles on your YouTube comment section. You can also send them to us on Twitter at ETF Guide. Be sure to hashtag ETF battles. So helping us to judge today's matchup is David Kreinces at ETF Portfolio Management and Mike Akins at ETF Action, the best in the business. Gentlemen, I'm humbled by your presence.
Good to be here, Ron.
So we got 4 battle categories: cost, yield, performance, and a mystery category. Now for the mystery category, that's where our judges get to pick which factor or maybe several factors are important to determining the potential final winner of this matchup. So I don't know what the mystery category is. We're going to just have to wait to see what our judges come up with. My battle scorecard, as you can see, is blank, which means it's ready, and I'm going to fill it out. We're going to begin with the first grading category. You've got 30 seconds. We're going to begin with cost. Dave, go.
So the cost is a whopping 6 basis points for Vanguard's Dividend ETF and 0.35% for ProShares Dividend Aristocrats. So Vanguard's VYM is the lower cost of the two. I don't even think Mike's overlapping symbol analysis can help ProShares here. However, some investors should remember to be reluctant to deviate from the S&P 500 unless it's really worth it. And since the S&P 500 costs just 3 basis points, these dividend ETFs are crazy expensive. So the win on cost goes to VYM with another asterisk in favor of the S&P 500.
All right. I almost had to throw a yellow flag there because of you poking fun at another judge. So just be very careful.
Oh, that was a respectful acknowledgement. That wasn't.
All right.
All right. I liked it.
All right. Very good.
I love his analysis. I love the overlapping symbols analysis.
So, Mike, let's shift to you. Cost, who wins the battle?
So, big shocker here. I'm going to give it to Vanguard and VYM. They obviously provide extremely well-diversified products for basically nothing. And if you're looking to allocate to broad market segments, it's hard to go wrong with a Vanguard product. But recognize that it is that. It's a broad market segment, and you're owning a broad part of the market. One thing for Dave's comment on expensive, it'd be interesting how he judges expensive when you're considering if you wanted to look at, say, PE ratios and compare, say, the PE ratio of VYM or Noble to that of QQQ, where you're going to find at historic discounts right now on relative basis. But I'm getting way outside of bounds here. Going back to the question, VYM is my cost winner.
Excellent. So we need to move on to the next battle category, which is dividend yield. Let's stick with you. Go ahead, Mike.
Easy win for VYM. VYM is a high dividend strategy, whereas Noble, NOBL, is a dividend growth strategy. And if you really take a look at the portfolios, you can see that both in perspective of yield, with VYM yielding a good 100 basis points more than NOBL. But you also can see it in the dividend growth or just growth characteristics in general. Noble is going to have a higher growth characteristics, and as we get to performance, that'll explain a lot as to why Noble has done much better over the more recent history. So,
well done.
VYM, yield.
VYM. Okay, I got that down. Well done. Dave, you're up. Dividend yield. Who wins the battle between these two ETFs?
So Vanguard's dividend ETF yield is 3%, ProShares is 2%, so Vanguard wins. However, the S&P 500 yield is 2%, and the annualized total return and overall risk of these securities will be much more important metrics. So the yield of these dividend ETFs, the win goes to VYM again, but on a risk-adjusted basis, I still asterisk in favor of the S&P 500.
All right. Asterisk, asterisk, asterisk. We're going to see if we can get through this particular battle without any more asterisks.
Just 3 more to come.
Let's move on to the next battle category, which is performance between NOBL and VYM. Dave, who wins?
So NOBL isn't that old, so I compared 6.5 years of most of its historical data. And overall, both of these dividend ETFs massively underperformed the S&P 500. So for total return, investors would have done much better just pairing the S&P 500 with long-term treasuries with or without leverage. So for risk, Vanguard's dividend ETF, VYM, lost 32% in 2008. Thank you very little. And in 2018, another challenging year, NOBL and VYM were unable to beat a 50-50 balanced portfolio. So ultimately, both of these dividend ETFs were expensive ways to underperform and increase risk. And while I do give the win on performance for these dividend ETFs to NOBL, neither of them came close to the S&P or the NASDAQ 100. So the balanced investable benchmark would be my preference. But again, I would asterisk NOBL's performance win in favor of the S&P 500 or the NASDAQ 100.
Cease and desist. Cease and desist. Okay, we got to move on to performance. Thank you for weighing in, Dave. Mike, who is your battle winner in this category?
Well, just real quick, sometimes I wish I was Michael J. Fox and I could get in my time machine and go back to, say, 1999 and play 1999 to 2007 and have this discussion with Dave about S&P and not buying dividends or not buying value. But staying within my lanes because I'm a rule follower, NOBL has clearly outperformed over since common inception, which, as Dave pointed out, is 6.5 years. And that's because NOBL's got more growth characteristics. VYM is a dividend value strategy. NOBL is what I like to refer to as dividend growth. It's focusing more on the growth of that dividend. That does not mean growth. Dividend growth just means less dividend value. Anytime you focus on dividends, you're going to get a portfolio cheaper than the market. And when value's in favor, you're going to tend to see dividend strategies outperform. When value's out of favor, like it has been, they're going to underperform. But in the current environment, NOBL's the clear winner of the two strategies I was asked to judge, Dave.
Excellent. Thank you for staying in the lane. And we've got to move on to our mystery category. This is where our judges get to pick a certain factor or possibly multiple factors they feel are important to this particular battle. Let's stick with you, Mike. What is your mystery category and who's your winner?
All right, so my mystery category has got to be about sector breakdowns. I think oftentimes people overlook this idea that the market is really just a grouping of sectors, and companies within the same sectors tend to be highly correlated. And because NOBL has such a high premium on how long it's increased its dividends, the number of years, 10 plus 20 years, I believe, actually, in NOBL's case, it basically excludes all of technology. And as a result, that's an interesting take on the market that I don't like. And VYM is owning all of the higher yielders, and it gets a larger percent to technology. So that mystery chart winner is going to go to VYM because of sector exposure. But I'd quickly point out that they're both drastically underweight more of the technology than the S&P 500. And as a result, that's significantly hurt performance in recent years.
All right. Good analysis. And thank you for those keen observations. Let's move on to Dave, your mystery category and who's the winner.
So Ron, before I get into mystery category, I just want to say that the reason for going outside the lanes with these other ETFs that aren't in the battle is simply so that the viewers could recognize that if the two ETFs that we're battling aren't actually a fit for that type of exposure in our client portfolios, what are we actually using in place? But for the mystery category, I like portfolio weighting, big surprise. And my weighting for both of these dividend ETFs would be 0 in favor of the S&P 500 or NASDAQ 100. And, I would score the portfolio weighting category as split decision because there's just too much outperformance with those broad U.S. indexes.
Okay, so split decision mystery category. Overall battle winner between NOBL and VYM. Dave, we'll stick with you.
So to recap, the dividend ETFs may sound good, but it's very difficult to beat the S&P or the NASDAQ 100. So overall, I'll score the dividend ETF battle between VYM and NOBL a split decision. And, investors should remember to focus on the annualized return and total return long-term, along with the annual risk, rather than just dividends and income. Dividends are only part of an equity ETF's total return.
All right, good analysis. I will say it's not analysis that everyone agrees with. And that still does not change the fact that you're more temperamental than a 1954 Jaguar. But I still like you. So, Mike, you're last up. Who is your overall battle winner between NOBL and VYM?
It's a tough one. For a dividend investor, you really are always struggling between this idea of diversification, quality company fundamentals, and striving for yield. And number one, striving for yield is never a good idea. So to that extent, I like to lean towards NOBL. And I also like to lean towards NOBL in the concept of it's a higher concentrated portfolio of securities. VYM's got nearly 400 securities. NOBL's got about 63. And if you're a dividend investor, odds are you're a little less you're a little more risk averse. And as a result, NOBL's dividend screen of consistency should get you a higher quality portfolio, and in a market downturn should provide you better cushion, albeit giving up upside in a bull market. So I'm going to give that overall winner to NOBL based on a little bit more sophisticated screening of companies based on historical growth of dividends year over year.
All right, very good. We've arrived at the judgment time, and we see here that according to my battle scorecard between these two dividend ETFs, the battle winner for today's program is VYM, which beat NOBL in the cost category. It beat NOBL in the dividend yield category, and it also was a split decision in terms of the mystery category. And also, by the way, we had a split decision in terms of the overall winner, NOBL versus VYM, with Mike favoring NOBL and Dave favoring neither. And so on my battle scorecard, again, VYM, even despite the differences of opinion and the split decisions, won in these two major categories, cost and dividend yield. And some really good observations and points as it relates to dividend investing made in this particular show. I liked specifically the difference in terms of growth and value when it comes to dividends. And I think that's something more dividend investors really need to think about. What are you looking for in terms of dividends? Are you looking for dividend growth or maybe a value slant, which would, in this case, favor something like high current yield, which VYM is definitely up down that particular lane. So these are all things that you have to give into consideration as a dividend investor. And so, again, put this particular ETF on your radar screen, VYM. At least this is hopefully a good starting point. We've given you some good things to work with research-wise before you make a final investment decision. Thanks again to our judges, Mike and Dave, for doing an excellent job and keeping it fun, which is what we try to do here on ETF Battles. Besides just bringing you great content, we also want to obviously keep you interested and entertained. Which ETF Battles would you like to see next? Be sure to hashtag ETF Battles in your YouTube comment section. Also, you can hit us up on Twitter at ETF Guide. Thanks for watching. I'm Ron DeLegge. And until next time, watch the battle before you invest right here on ETF Guide TV.